And then AJ, I think, did an amazing job here of pointing this out. So Tesla's cumulative free cash flow of 20 billion juxtaposed with Rivian that's now lost 22.8 billion. Every pure EV maker that AJ tracks has lost billions and billions of dollars. None of them have turned the corner like Tesla did. Lucid is at the point where Tesla turned the corner in its life cycle, but Lucid's showing no sign yet of turning the corner. Rivian's still a little bit younger company, but they've lost more than twice as much as Tesla ever did. At one point, Tesla was down about 10 billion, and they've made 30 billion since then, and now are positive 20 billion. This is how brutal the EV business is. We've already got 2 rest in peace signs on this chart, Faraday and Canoe, and more to come, I'm sure.
Yeah, unfortunately, we can't make this chart bigger, but it's a great,
if you go to the
great
next
chart.
page, Robert, there's a larger version.
Good. That one should have told me earlier. Okay. Yeah. All right. So this is a chart made by AJ, which is fantastic. Thank you to him. Follow him at ALOJOH, Alojo. And this is free cash flow history. So at the very beginning here, all of these EV makers, he puts it at the very beginning. Let's say the date that they started, so that you can kind of see how long did it take? How long did it take Tesla to finally turn the corner? It looks like it's 8 or 9 years after existing. They did turn a corner. But it's less important about the years. What more important is whether or not, how much money did they spend? And so here they spent 10 billion and then Tesla flipped over. But look at Rivian. Rivian's already at $20 billion and going down further. How long can you keep getting investments? I mean, maybe Lucid, somebody, Saudi will just say, whatever, we'll keep putting 20, 30, 40, 50 billion until you turn the corner. But yeah, this is how you die. It's just at some point, your investors go, I'm not going to keep throwing money at something that keeps not profitable.
Yeah, and unfortunately, Ford, to give them credit, they actually show us their EV division, whereas other car companies don't. So Ford's on this chart, and Ford has had the most rapid amount of money losing of any EV maker ever. They're losing money faster than Rivian ever did.
Oh, really?
Right. If you look at Ford there, it's about year 4, they've lost, what's the number? 14.1 billion. And at the same point in time for Rivian, they were probably down about 9 billion at that same point in time. So Ford has dropped or lost more money faster than anybody else has in this business. It's hard to be, to outperform Rivian in that regard, but they have.
Yeah. And that's why we don't have like BYD or the Chinese EV makers. He doesn't have the data.
And I'm sorry, I think I may have got my lines crossed. I think I said that Lucid is at the point where Tesla turned. That actually, I think, is probably NIO.
Yeah.
They're down about 10.7. Lucid, those lines crossed there. That's why it confused me. Lucid's down about 13 billion and showing no signs of turning the corner yet.
Okay, even worse. Okay.
Yeah.
Wow, those are great slides. Those are important slides.
So Tesla has 3 business units, right? Autos in red, green is energy, and services and other is yellow. And on this chart, I showed regulatory credits separately as a kind of its own separate business unit. And so you can see that the green bars, the regulatory credits, pretty small. And the green and the yellow are getting bigger and bigger over time. And then another way to look at it is to common size all this on the next page and look at percentages. And you can see that over time, the yellow and the green is becoming a larger and larger share of the total revenue. And right now, it looks like the auto business is around 73% of the total revenue this last quarter. 2 quarters ago, it was under 70, but that was a low quarter for autos. Okay?
Yeah, that's a great slide. I mean, it shows you that energy, which is green, is growing. And it's like you can actually see it. And it's actually a significant part of the total revenue. So that shows you that it's no longer just a side business. It's becoming a big business. And eventually that green bar will be as big as the red bar, or where it is now, right? Where the red bar is now. In fact, some people think it'll cross over. And then the other point, I think, is the blue, which is regulatory credits. People think, oh, that's where Tesla makes all their money and they're supported and funded by that. And no, they're tiny.
Yeah. Now, if you look at it, though, from a gross profit perspective on the next page, the blue suddenly looks bigger because I'm basically saying that all of that revenue is gross profit in the case of reg credits. So the blue as a share of the total here is bigger, but still you can see as the blue has shrunk a little bit in the last couple of quarters that the green and the yellow have made up for it. Particularly, we've seen a lot of growth in the yellow in the last couple of quarters in terms of gross profit. So that's that third business that everybody really doesn't focus on is starting to contribute in a somewhat meaningful way to profit.
We're still debating do you know already what's in services? Some people thought it was.
is what you think it is. It's servicing the vehicles, right? It's the supercharging network. It's Tesla insurance. It's used car sales. It's Tesla diner. It's the Tesla shop. It's basically everything but energy and selling cars. Robotaxi, by the way, for now is in the services and other business. So that actually doesn't help. That would be a drag on the numbers in terms of profitability. And yet that business is actually improved from a profitability standpoint. We'll see here in a second. This one is just focusing on autos and revenue and energy. If they were the only two business units, just to show people how energy is growing. You can see that from a gross profit perspective in Q2 2022, energy, contributed some profit. And since then, that green slice is getting larger and larger and larger. The autos have fluctuated a little bit, but the energy part's getting bigger and bigger.
And it's very easy to see the green line is going to double in size because they've doubled the factories.
That's right.
And then the third factory is going to come online too. And then the fourth factory. And so people go, well, I can see energy growing maybe 20, 30% per year. I can see that. But then they don't realize, well, what happens when they double factories? That means you double everything.
Yeah.
This is going to grow fast.
Yeah. And hopefully maybe there's even some more economies of scale. This is looking back now at all four of the quote unquote business lines, including reg credits. And you can see that autos now is about 64% of the total from a gross profit. So it's about 73% of revenue. That's 64% of profit.
So it's no longer a car company.
Well, majority still for sure, 2/3 is a car company, but the other businesses are starting to become larger and larger. Just wait until we get Robotaxi on here. When they start breaking that out and we can track that, it's going to be, and I've done that in some of my models, but here's gross margins versus net margins. So gross margins of 18% company-wide. Net margins, depending on how you look at it, whether it's net margin or operating margin, 6.3 or 5.8%. Okay, so not a whole lot to share there other than that's what it is for now. And then this is auto gross margins with and without the reg credits, depending on how you like to look at that. So with the regulatory credits, 17%, and without 15.4, which is an improvement. Last couple of quarters have improved over the low first quarter. So hopefully we turn the corner on that for the auto business.
Again, people are laughing. Look at how much the gross margin fell from the height of the COVID. Yeah. But hey, dude, it's 17%. It's an auto business.
Yeah.
It's like, yeah.
Yeah. At 30%, you're in probably Ferrari territory. And so, that's great while it lasts, but that's not going to last.
So, yeah. I'm not so worried about the auto gross margins. Yeah, this is just a means to an end to these two major businesses that we're about to launch.
This next chart, I think, is quite a nice one in terms of showing the progression of gross margins for their three business lines over time. Autos in blue, 15.4 now. Green is energy, 31.4. So more than double the gross margin profitability of autos, which is amazing because it's just batteries in a box. I mean, obviously, it's more than that. There's a lot that goes into those systems, but at its most basic essence, it's just batteries in a box. And then the services and other has kind of been a surprise. 10.5% margins is actually pretty decent, and it's starting to contribute in a meaningful way to profitability. And look where it came from. It was down 40% at one point, negative 40% gross margins.
And this is where Elon said, and he said that he has to decide if you have a battery, where do you put the battery? Do you put it in a car? Or do you put it in a stationary battery? Yeah. And if you're making 30% and you're just stationary and takes you less, effort to make it, and it's easier to sell, all that, make that.
Yeah.
But
a couple of things there too is the batteries going in the storage are typically different than the batteries in the cars. So that's kind of nice. You don't have to make that choice as much, right? And then secondly, the thing to point out too with energy is there's an AI component to that too with AutoBidder. And Tesla doesn't really disclose much of anything about that, but my suspicion is that is starting to drive those gross margins higher.
Even more, yeah.
Even more over time. This is looking at average selling prices for cars versus the cost to make. So we started at $70,000, right, in Q3 of 2018, and we're down now to an average selling price per car of about $42,000. The cost to make has gone from about $55,000 down to about $35,000. Since 2018. Pretty amazing.
Yeah, this cost to make. They keep working on it, but it's going to be flat the last year.
Yeah. The difference in these two lines is the profitability. of selling a car. And on the next page, you can see that quarter by quarter. At one point, Tesla made over $15,000 by selling a car. And this last quarter, it was $6,150.
Yeah. So they make $6,000 per car.
Yeah. This is gross profit, by the way, not net.
Oh, really? Right. Okay. We'll see what they really make. But I mean, if that's all you make, 6,000 per car, right? Yeah. It's like, geez, you can make a lot more money with robotaxi.
Yeah. And that's why it's a fundamental business model change that we're looking at here in the next few years. This is just looking at quarter to quarter of the change in the average selling prices. Sometimes it's up, sometimes it's down. There's different mix shifts here, depending on if they're selling Model Ys or Cybertrucks or whatever. So there's all kinds of things going on here. Jeff Lutz, I'm sure, would love to pick this apart, but you can see that in the last quarter, basically the average selling price dropped by about $9. Herbert, when I shared this chart in the live stream, there was actually an error in the last couple of boxes. So this is the corrected version.
This is great. Okay.
And then the next one is the cost of goods sold, the cost of making a vehicle. And you can see the quarter to quarter changes. It's trending down over time. That sometimes there are blips where things go up. And then the third chart in the series is the profitability. This is another way of looking at it in terms of the quarter to quarter changes. Okay, let's talk about Tesla's energy business a little bit closer. This is quarterly revenue, record revenue for energy approaching $3.5 billion in Q3. This business tends to be a little bit lumpy, so we should expect some ups and downs. I have no idea whether Q4 will be higher than Q3, could be lower, but over time it's going to trend up.
But isn't there there's competition coming, that there is the prices of, that'll turn into margins, right? But the price of lithiums.
We'll get back to that in just a second. This is the services and other business, and really strong increase in revenue this quarter to about $3.5 billion. So the revenue of energy and the revenue of services and other right now is about the same.
Mm-hmm.
And it's funny, no one talks about services and other.
Yeah. No.
Right? It's like it doesn't exist.
Mm-hmm.
In terms of its contribution to the company. This is putting two together. Imagine the business that was energy and Tesla's services and other supercharger business and used cars and vehicle service. If that company existed as a standalone business, it did $7 billion in revenue last quarter. About a $28 billion a year revenue company.
It'd be interesting if you take that and go, where does that fit in the Fortune 500?
Yeah, good question. It would be a decent sized business.